Everyone talks about banking the unbanked, but who is actually doing it? Today's guest isn't just trading tokens, they are building houses. We are talking about the hardest problem in crypto, real world utility. Their goal is wild, financing 1 million homes by 2030. This is Empowa. Hello, everyone, and welcome to today's Project Spotlight. I'm your host, Harun Mwangi, a developer advocate at Intersect and the Open Source Office. Today, we're doing a deep dive spotlight on a project that's arguably one of the most successful real-fi applications in the entire blockchain space. We are joined by Greg Schneider, the Chief Operating Officer at Empowa. Welcome to the show, Greg.
Hey, thanks for having me on.
So let's just into it. For those who might just be hearing of Empowa for the first time, it's a platform using Cardano to finance affordable climate smart housing in Africa. But that's the one liner question. Let's start with the first question. From the ground up, for those new to the project, Empowa has a bold goal, financing 1 million homes by 2030. Can you give us a high-level overview of what Empowa is? Specifically, what is the core problem in the African housing market and the traditional banks couldn't fix, but you believe blockchain can?
Great. Happy to. So it's always useful when trying to think about the problem that Empowa solves to share some kind of real world stats. So our first pilot project was in Mozambique. Now, Mozambique is a country of 31 million people. But before we entered the market, there were only 600 home loans in the whole country. That's 600. So
in total, like 60, not 600,000.
No, 600. It always blows people's mind when I share this fact. And clearly that demonstrates something is broken in the housing market. Now, the reality is there are equally surprising stats if you go to a country like Kenya, which is Africa's third largest economy. I think it's about 55 million people and only 27,000 home loans. So most of people listening to this interview will question, why are there so few home loans? Mm-hmm. And it's obviously not poverty, because we can all agree, yes, a country like Mozambique isn't wealthy, but somewhere between 600 and 31 million, there are people who can afford to pay off a home, and there are people living in homes, and there are people living in houses, and etc. So what is going on? Well, it's important to know that around 85% of income across the African continent is informal. And a mortgage or home loan, as many of us understand it, is really a product designed for the formal economy. The bank wants to be able to see how much you earn each month with a payslip. They want a whole bunch of documentation, and then they want you to commit for the next 20 or 30 years to pay in a fixed amount every month on, say, the 25th of the month.
Okay.
However, if you earn informally, it's very hard to make that commitment, because maybe this week, let's say you're an Uber driver. Let's say you run a vendor store on the side of the street. This week may be a very good week and you may have a lot of money, and next week may be a less good week. And it's very hard to commit to paying on the 25th of each month. Mm-hmm. So our first innovation, which isn't blockchain, but is a kind of restructuring of the offering, is to offer a rent-to-own solution. So what does that mean? That means that every tenant commits to paying a fixed rent that is non-negotiable each month. And then they have the option to ad hoc contribute to the equity when they have access to additional funds. Now, there are obviously a period over which they must pay back the funds, and there's obviously certain milestones they must hit, but it means that if you have more money this week, you can put the money into your home loan, and if next week you don't, then you don't need to, and if in 2 weeks' time you do, etc. And that flexibility allows people to actually sign up for something like a home loan, and it better reflects how their income is received. Now, the question, so that innovation has been quite transformative, but then the question we often get in this space is, okay, but now why blockchain technology? And we are really one of those projects that didn't start out trying to be a blockchain project. We started out trying to address this challenge. And as we started to look at some of the problems that were really inhibiting us from doing this successfully, blockchain became the obvious solution. So the first and foremost is often when investors are looking to finance uh, projects, especially in African market or in other emerging markets, there's always anxiety around the lack of transparency. Where are my funds going? Are they being used correctly? Are the funds being received, etc.?
Mhm.
Now, importantly, the way we finance our projects is we don't actually finance the end tenant. We finance an intermediary, usually a developer, who is then responsible for managing the tenants on the ground. So a developer who's maybe sitting on 100 units is looking to try sell those. Some maybe they've sold for cash. Very few maybe they sold on a mortgage. Well, those developers can now turn to their potential clients and say, we can offer you this rent-to-own solution. So we are often B to B to C finance. The intermediary developer is responsible for the loan, but they
Mhm.
use those funds to provide this rent-to-own solution. So our platform records all the payments being made by the tenant onto the blockchain. It records all the payments being received by the developer and all the payments that are being paid back. So now, as an international investor or a local investor, you can clearly see in immutable records online that where the funds have flowed, and you can say with confidence, okay, the money's there, and therefore there's no possibility of a developer saying, well, I haven't received my funds, or oh, this, it's all transparent. The next major challenge that often faces investments is the flow of funds in and out of a country. So for our first project in Mozambique, we deployed an amount of money, and Mozambique doesn't have any crypto exchanges, but through peer-to-peer, we were still able to liquidate those funds into local currency in about 3 days. Another partner sent a similar amount of money through the traditional banking sector, and it took 6 months for those funds to clear the Reserve Bank. Now,
Wow.
again, I don't need to explain to anybody why waiting 6 months for your money to arrive might impact how you do business. So that's
Yeah.
another big challenge. The next blockchain use case is really around bringing liquidity to the market. So if I am an investor and I'm saying, I want to support your project, it's a 10-year investment. Up until now, the expectation has been that those funds are locked for those 10 years. And that increases substantially the perception of risk because, funds locked are funds locked. We have built a platform that allows us to tokenize that investment, which then means that those tokens can be traded. Obviously, tokenizing is much more cost effective than, for example, issuing shares for them and trying to create a share marketplace. So we have a tokenized marketplace, which gives those investors the peace of mind that should they need to liquidate a portion of their investment, they can, right? Other investors can come and pick this up.
Mhm.
And then the final one is around collateralization. So the most important thing to point out is all the loans provided are collateralized by the underlying property. So that's never up for debate. In the event of a default, the property is the ultimate form of collateral. However, we do know that there can be costs involved with liquidating those properties. There can be a time delay, etc. So what we do as Empowa is we over collateralize our loan using some of our token. So the expectation is that the developer, in order to unlock the funding that's been secured, we need to buy an agreed percentage of that in our token. So let's just, for simple terms, imagine that if we're issuing $1 million loan, maybe the collateral requirement is to buy 10% of that value in our token and provide that as additional collateral. And so that becomes an over collateralized loan. You have the house and you have the tokens, and the value of the tokens is that it can be used in the event of default to cover any shortfall. So maybe there's a delay in repayment by a couple of months, where we have the tokens to kind of cover that until we've been able to liquidate the property. So unlike some other crypto loans, it's not the token isn't the collateral, exclusive collateral. It's not going to get liquidated on the first sign of default, but it gives that added sense of security. And why that's useful is because it's not linked to the local currency, which is one risk that you always observe in investing in emerging markets. It also can be much more easily liquidated than, say, for example, trying to go and sell an apartment in Nairobi, Kenya, which can take some time. It can also be moved more easily if you're an investor sitting in Switzerland. From the kind of heating or air conditioned of your apartment, of your office, you can easily move crypto tokens around more easily than you can in kind of trying to, now exchange currencies and properties, etc., etc. So, long answer, but hopefully a good initial introduction to who we are, the problem we're trying to solve, and how we're doing it using blockchain.
Yeah, very, very, very comprehensive. It seems like you're attacking this problem from very many different angles. One thing that I did not know and I've come to learn is that you guys did not start as a blockchain company, which is very interesting to hear. And it probably speaks to how you guys have been able to be this successful. You're not trying to make the technology fit into the solution, into the to solve the problem. You had the problem first.
Exactly.
So we hear the term RealFi thrown around a lot, but let's make it concrete. If I am a user watching this and I want to support this mission, how, I know you've explained it, but then now just for the people who might have missed it, how does it actually work? Like, walk us through the journey from a user connecting their wallet on your platform to the moment a family in Mozambique gets the keys to their new home. What are the steps? Like, just
Yeah.
simplified. Mm-hmm.
Absolutely. Okay. So our first port of call is usually a local partner, typically a developer who has a series of homes. Now, we do not finance construction. So that's another important thing to point out. There's a lot of risk in financing construction. So we kind of get connected to local developers, either once they've completed the units or very close to completing the units. We finance what in the industry you call offtake, which is the financing of the ability to sell these units. So let's talk us through a real world example. We have a partner in Kenya called BrownCap, and they're a very successful partner of ours. They have a block of flats, and they've determined that of those 50 apartments, they'd like to offer 25 of them on rent to own, as an example. They will market those as they normally would, identify potential clients that could be a good fit. They do that through our system. We score those clients using an algorithm that we've designed to work out whether they'd be a good fit for rent to earn or not, factoring in the informal income. We've now, from the 300 people who've applied, they've picked the best 25. Okay. They apply to our kind of institutional investors who would like to support their project for funding. They go out and they secure, for example, $1 million. Why do they need $1 million for those 25 units? Or they need much less, let's say $250,000. Well, they will have construction costs. They will have other costs that they need to settle. So the idea would be that that funding would come in, would settle all the construction, financing, etc. Basically the same way that a mortgage would ordinarily work. So normally in a functioning property market, a developer builds their units, an individual comes, they apply to their bank, the bank is in the mortgage settles, the developer and the developer leaves, and now the tenant or the new homeowner is paying back the mortgage to the bank. We don't have that situation, so we settle part of the payment for the developer, and then jointly with the developer, we collect from the tenant. Okay, but the developer says, I want to secure this loan. It's a $250,000 loan, for example. I need to put down, say, 10% in EMP tokens. That's $25,000. Potentially they have the money, maybe they don't, right? Think of it like putting down a deposit for your home. The bank says you need to put down a certain amount of deposit to get a home loan from me. It's the exact same scenario. So in order to ensure that that deal still goes through, we have a structure where the developer can go to our community and say, please, can I borrow the tokens from you to meet my collateral requirement so that the deal can go through? Let's say, for example, that they have $12,500. They buy half their token allocation on the open market, and the other half, they make an application to our community to borrow those for an agreed period of time at an agreed return. Right now, the return is typically, the period is typically 1 year with a return of 11.1%. So they will make that application. We will then sell NFTs in our token. So Harun, you as a potential community member can say, I like this project, I want this to go ahead. I am going to buy 20 NFTs for 900 EMP each, providing some of my EMP to the developers so they have the collateral to go ahead, and I hold the NFT. Why an NFT? Well, that's your receipt of support. You yourself could go trade that if maybe you wanted to get your EMP sooner. So let's say, as an example, in 6 months' time, you go, I really want those tokens back. You can sell them on a marketplace and get your EMP back, and the other person can hold the NFT till maturity and get the return. Okay, so you as a community member have bought these 10 NFTs, for example. You've loaned effectively 9,000 EMP to the developer so they can meet their collateral obligation. You have your NFT. In a year's time, the NFT matures. That's about to happen for our community tomorrow. Will be a maturity date. You take that NFT, you burn it, and we return 1,000 EMP to you. So you bought it for 900, you get 1,000. That 100 is your reward, your return for having supported the developer over that period.
Okay.
The developer at that moment can say, okay, I want to buy more EMP on the open market so I can keep more of the profits myself, or I need to still borrow a little bit because maybe I'm not in that position, and they can reissue the NFT, and so it goes. So for every time a new project is listed, either the tokens for unlocking that funding are bought on the open market, or they are borrowed from our community and locked up for a year. So that reduces the supply, and our community earns a return for it. So yesterday we had a sale of collateral NFTs to raise just over 500,000 EMP. We had some early access ones that sold out in a minute, and then the rest of them were sold out in 10 minutes. So there's a huge demand from our community, and we'll have another sale later this month. We have another sale planned for January. There's a lot of properties coming online, and so there's a lot of this opportunity for community members to support these projects in a very real way, earn a reward for it. And the final thing I'll say on this is, we are not a charity, we're not a not-for-profit, but we are an impact project. So we believe strongly that we can solve this problem, get people into high quality, affordable housing, while still making a healthy return for investors, for the developer, for us, and for our community. And we believe that this problem will not be solved using charity alone, because it's all good and well. You get donations and donations and donations until something happens and then the donations dry up and the projects fail. If we can create a financially sustainable business, then we really can tackle this problem, right? There's an estimate of a 50 million home backlog, affordable home backlog across the African continent. We're also looking at other emerging markets. We're not going to solve that as charity. We need to find a business model that works. And then it is, of course, I won't lie, it is, of course, nice when we go into these markets and we see the homes and we see the families and we see the impact we've made. Of course, it makes you feel good because you are making a real impact for real people. But we're not asking people for donations and charity. We're telling them this is a good business. There's a good business here. So,
I think you've answered it very well. Very well. Now, your focus is in the emerging markets. Emerging markets have been known to have like a lot of currency devaluation, inflation, political risks. Other than now, the asset itself as the collateral and the over collateralization with the EMP token, can you speak more about the security architecture of your finance model?
Yeah. So you're right. One of the big challenges in dealing with emerging markets is political uncertainty, currency risk, etc. Part of what we try and do when we design our products is to make them as diversified as possible. So when you're buying a collateral NFT, like I just described, I kind of maybe misrepresented it in my example in making you think that you were supporting one developer, one family, one home, etc. We avoid that because what that means is, should something happen to that development or that developer or in that city or in that country, all of a sudden you're exposed. So we're currently active in Mozambique, in Nigeria, and in Kenya. And what we try and do when we mint our collateral NFTs is to take a little bit of each of those, from each of those markets, from different developers, from different cities, also from projects at different stages of maturity. So again, a project that is just starting out is, of course, more risky than a project that's close to being paid off. So we try and kind of diversify it, and we'll continue to. It's challenging now still because we're relatively small, but obviously as we grow, the plan will be to issue these collateral NFTs for our community that cover as broad a spectrum of partners as possible. Potentially in the future, it may be both developers based in African emerging markets and other emerging markets. Some that are at 4 years of a 5-year loan, and some that are at 4 months of a 5-year loan. So really trying to kind of spread the risk. So that's how we structure the project to diversify the risk.
Okay.
What we also do is, because we have access to this data, I can look at any moment on any developer and see exactly which tenants have paid, how much they've paid, etc. And we have a series of warning systems that, should we start to see tenants fall behind, we can flag that as a risk factor. Now, whilst the tenants are not responsible for paying back the loan, the developer are, the two are interconnected. So if I have a developer who has 30 tenants and 25 of those tenants are not making their payments, even if the developer is servicing their loan, we know at some point that's going to catch up, right? There's going to be a problem. So we can already step in and take action. So we kind of use our kind of data all the way down to a tenant level, and the tenants make their payment through an application that we've built. So we can have full line of sight, so we can get involved. We obviously try and diversify the risk. And of course, when it comes to things like currency, yes, we both source capital locally, where fluctuations in currency price are less of a concern, and internationally. So we blend that. And one of the big challenges often in housing with currency fluctuation is that construction. So you expect the project to cost $1 million to build, the currency devalues by 30%. Where do you get that extra, 300,000? Because we come in much later in the journey, kind of at the kind of completion of construction, we're not completely immune to currency fluctuation risks, but we're much less exposed. Yeah, that's high
Okay.
level. I mean, I can really get into the detail about currency hedging and everything, but that's not that interesting.
I think that, yeah, I think we do not want to lose our users with all the technical details.
Exactly.
But that's well answered. Thank you very much. So I was digging through your GitHub and I saw you guys have an ecosystem marketplace app and contracts repo. Most projects just list on a secondary market like JPEG store and call it a day. You guys went the hard route and built a custom open source marketplace. Do you have a particular reason? Was there a specific technical limitation in existing standards that forced your hand, or is this just a strategic choice to own the experience?
No. So first of all, you did some proper research, clearly. So yes, there's an open source marketplace that is free for anyone to use. And what makes that marketplace unique is it allows you to sell an NFT in a Cardano native token. Now, the reason why that was important for us is, I mentioned in our collateral NFT sale that you buy the NFT for 900 EMP, and you burn it a year later for 1,000, securing 100 EMP reward. We wanted to bring liquidity to those NFTs, but not have there be a kind of a currency risk. So by that I mean, let's assume you want to sell your NFT of 900 EMP, and there's an ADA price of EMP as it stands today. You now need to factor in, okay, what's ADA to EMP today? What will ADA to EMP be in a year's time? Am I going to lose on that? Is 1,000 EMP going to be more ADA? It's going to be less ADA? It creates uncertainty, and we want to remove uncertainty. So by having a marketplace where you could sell the NFTs in our own token, you can have bought it for 900. You can list it for, say, 950. the person who buys it can buy it for 950 EMP, wait until it matures, and collect 1,000, and know that they're making 50, and you've made your 50, and you lose nothing. So that was important to be able to make the trading experience of these collateral NFTs a much easier experience for our community. For anyone watching this call, if they ever need any help setting this up, obviously please reach out. If they, for example, have a use case to sell their own NFTs in a Cardano native token, our open source solution could be a good fit for them. Unfortunately, JPEG Store and any other marketplaces don't allow you to sell NFTs in anything other than ADA, which makes perfect sense, but that didn't work for us. Hence the reason we built it.
Okay, makes perfect sense. If we can just talk a bit more about the tech stack. We know you're running on Cardano, but which smart contract language are you using? Are you guys exploring Aiken or any of the new smart contract languages?
Yeah, so I'm not the technical person, obviously.
Okay.
So I'm not necessarily sure if I'm going to give you the best answers. What I can say is we're currently, well, we actually have completed a project for the NSE, so the Nairobi Securities Exchange. We are running a pilot with them to build out a platform for tokenized and affordable housing in Kenya. That was financed by Catalyst, and literally a couple of weeks ago, we tokenized our first set of projects for them. The big announcement and fanfare and everything will happen in the new year because of, it's now festive break, and especially across Africa, but especially markets like Kenya, things go much quieter. So we didn't want to miss out on all the hype around that. But there, we pushed the Cardano technology as the preferred blockchain, and all the smart contracts and everything, kind of using, best practice. Those have been audited, and if anyone is interested, those audited reports will form part of our Catalyst submissions, so they should be public. Those submissions need to be handed in January. So if anyone who's listening to this call says, I wonder how Empowa's bought all their stuff, there are members in the team who can give you a good answer. I'm not that person, but that all will be very public, and so people can kind of pour through it and, of course, give their thoughts and feedback. If there's ways that we can improve any of our systems, none of our systems are static. They all are constantly being evaluated, improved, and made sure that they're operational with the kind of most up-to-date standards.
Coming from Nairobi, I'm really interested and excited about what you guys have going on with the NSE. But I have one more question still on the technology aspect. How do you guys verify the real world data? Is there an Oracle solution or a human Oracle process you use? Do you trust the developers with the information, or the tenants, or is there an Oracle that has this information somewhere?
Yeah, it's a great question. So no, it was blockchain. You can't trust anyone, and that's not a good way to go about it. But at the same time, we do have a challenge in that it's not realistic that our tenants are going to use crypto to pay their monthly rent, right? There's no stablecoin in Kenya, as you're probably well aware. It's also a learning curve that we don't necessarily want to take people on at this early stage. So we have a system where we will, there's a number of different payment options. You can use M-Pesa. If you're in Kenya, you can use your debit card, you can use a bank transfer, etc., whatever it might be. We have different payment gateways, fiat payment gateways. So Paystack's a very well-known one that we've integrated with, a Nigerian-based subsidiary of Stripe, so kind of a global leader on the continent. We have a system where, as that payment is made, it is observed by our system and immediately written on chain.
Okay.
That's not the cleanest solution, but it's the most elegant solution we could come up with at this stage. And that means, so if we were to say to ourselves, well, how can somebody manipulate that? Well, you would first need to either manipulate the Paystack system, which would be incredibly difficult because obviously, banking grade infrastructure, or you would need to intercept that communication from PaySec to our system, which again would be quite challenging, or you would need to change it on the Cardano blockchain, which obviously we all know is not possible. And you need to all do that at the moment that the person made a payment. Well, there's a very limited incentive to do that, and it's very hard to do it on scale and everything. So in general, we think that that's a solution that for the time being allows us to get the most up-to-date data. Once we have observed that the 1,000 Kenyan shilling payment has been made and has been recorded on chain, then we have an immutable record, which we can, which we will believe unless we are shown somehow that this payment was not received or whatever the deal might be. Again, if the money gets refunded, it also gets recorded on chain, etc. So there will be a ledger of payments. And again, the developer, we can intend to develop and say, we noticed this month that you got 100 payments. These were all the payments. This is all recorded on chain. We therefore expect you to have X amount available. And in some cases, money will be paid into an escrow account that we both have line of sight on. So, we have all the kind of usual banking stuff in the background, but ultimately we have this record of payments and we can always refer back to and say, this is what we saw you get paid. Tell us why we should not believe this. And I mean, we work with very trustworthy developers, so we haven't had that problem yet, but you could imagine there's no way out, right? When the blockchain says the payment was received.
It was received.
It was probably received, yes. Definitely received.
Thank you for that. I'm back to the Nairobi Securities Exchange.
Yeah.
So you're tokenizing real world assets with the Nairobi Stocks Exchange. So where exactly are you with the pilot, and till when can someone in London be able to buy a house in Kenya?
Yeah, exactly. So basically right now we're through the pilot. We've listed our first set of properties that are, I can share the exact location. I'm not 100% sure where they are in Kenya, exactly in Nairobi in terms of the suburb, because I always stay in Riverside, but our affordable homes are not in Riverside, obviously. But yes, so that first pilot has gone through, and we will then be kind of onboarding more properties and more investors in the new year. Right now, we're talking to a combination of both local partners, so local pension funds, as well as some local organizations, like seeing where we can get support from organizations like KMRC, Shelter Afrique, as well as international organizations that want to kind of invest. The reality of the space is you really need to crawl, walk, and run. So nobody likes to be first. This isn't like the VC space where everyone wants to be the first in. This is a much more traditional space. So as we can demonstrate, we've raised $700,000, $1 million, and $2 million, and this has all gone through the system, and our tenants are paying back, and the money's all flowing as expected. It becomes easier and easier to unlock additional capital. So right now we're at kind of that proof of concept phase, and then that will allow us to demonstrate to institutional capital that this works, and we can continue to move forward.
I'm personally super excited to hear about what you guys are doing here in Nairobi, and I'll definitely be keeping an eye out and listen and an ear out listening to what's going on and the developments.
Great.
Now, for the builders watching, you have a lot of open source components. Where do you exactly need help if a developer wants to contribute to the Empowa repo? Where would they start, or where would you advise them to begin?
Yeah. So look, we always are looking for development support. I think that we kind of divide our development time into, we think about it in kind of two separate ways. The first is really our community blockchain focused stuff, which is things like the marketplace and the kind of collateral NFT sales and the burning contracts, etc. And then there's the more traditional audience, which honestly, a lot of that development is more Web 2 than Web 3, right? We're building platforms that need to be easy for developers in Mozambique, in Kenya, Nigeria to navigate, for tenants to navigate, etc. And importantly, they don't need to or shouldn't see the complexities behind the scene. Now, I recently had a call with the team from ZK in their new wallet, which allows you to set up a wallet using a Gmail address. And that's something we'll be integrating, and it's super valuable for us because one of the big challenges we have with onboarding tenants and developers and anyone in the ecosystem is the seed phase, right? It's hard to really communicate to somebody how important it is that they don't lose that seed phase. And if they do, how we can do nothing to help them. It's very so, I mean, if you think about before you enter the Web3 space or the blockchain space, or the crypto space, you always just knew you could just phone your bank or your provider or something, and you might need to jump through a few hoops, but you could get help. It's a very hard concept to explain to somebody. If you lose this and you phone me, I cannot do anything. I can't. As much as I want to, I can't. And so now with being able to use, for example, email addresses to set up wallets, that's going to make things a lot easier. Anyway, back to your question. If people want to contribute, it's always good to reach out, and we're always looking at how we can improve our Explorer, how we can improve our marketplace, how we can make the experience of trying to understand what it is you're supporting, what it is you're investing in, taking our data, putting it on kind of in a more visible way, because that's it's we're lucky in that we have tenants and we have homes and we have all these stories we can tell. But what can also sometimes be a challenge is that, yes, these people who have moved into the homes are very grateful to have this opportunity, but they've taken out a home loan, they have a life to live, they have things to do. It's not charity, so they're not going to sit down with us kind of every other week and tell us their story about how they couldn't get a home and now they can get a home. If your bank phoned you and said, can I interview you about giving you a home loan? You might say yes, you might say no. And if they phoned you 2 weeks later and said, can you tell me your story again? You'd be like, well, no, I have a job and I'm not going to be doing marketing for you. So it is nice to be able to show kind of from a data perspective how we're performing. And also what always blows my mind is we knew the people who we supported would be able to finance these loans. What we never expected, for example, was in Mozambique, within the first 18 months, on average, more than 20% of the value of the home had already been paid off. Now, remember, these are
Wow.
people who, all of them had been rejected from a home loan. All of them were not financially stable enough to be able to afford a home loan. Yet somehow, all of it, 100% we had 95% on payment time, not a single missed payment. So we say on payment time is that rent was paid on the day that it was due, but nobody missed their payment, i.e. went more than a couple of days after. And we had on average 20% of the home loan paid off already. So it just goes to show that given the right financial product, there is an ability for people to service their home loans and to own homes and to make payment. And in fact, maybe outperform what you expected. It just needs to be structured correctly. And so that kind of data is always stuff that we try and showcase, but we can do better. So to answer your question, if people are interested in reaching out and developers to reach out, please, you can contact us through our website, contact us through Telegram, through Discord, through Twitter or X, I suppose. All the usual channels. I think we even restarted our Instagram page recently, so you can reach us out there. And we'd love to get into contact and discuss what aspects of the project you find interesting and where you can add value. And the final thing I'll say is we've been in the Cardano ecosystem now over 4 years. We kind of see ourselves as one of the more OG projects. We've received a lot from the Cardano community, both our first funding was from Catalyst. We've had community members support us throughout. We've got a big round of investment for this NSE project through Catalyst. So wherever we can make our stuff open source, and we can't always, but whenever we can, we try and do that to give back. Whether it's, so that's, for example, why the marketplace was made open source as an example, because we want to kind of grow the ecosystem wherever we can.
Yeah, that's the way to go, definitely. Supporting the community and the builders and open source, as a matter of fact.
Sure.
Greg, this has been very eye-opening. Thank you very much for coming and sharing the reality of what it takes to build Empower. For everyone watching, if you want to support this, or if you are a developer looking for those open source contracts, we'll make sure to drop the links in below, and go check them out. Follow Empower on X, and let's get those houses built. We'll see you
Excellent.
in the next spotlight.
Yeah, absolutely. Thanks, Owen, and thanks to the community for watching.
Thank you so
Everybody.
much.
Bye.
Bye.